Traders Anthony here. Don't let this daily time frame fool you. If the weekly time frame is bearish, I prefer to look for sell opportunities on the daily and the weekly. Lower time frames, you've got a bit more leeway, but I tend to want to stick with the trend on the higher time frames, and this is why. Big banks are invested in selling this market, and in the process, they're going to pull it back up into liquidity, and then they sell off. They drive it into liquidity, they sell off, they drive it into liquidity, you get this run, they get the retrace, expansion, retrace. With every one of these legs to the downside, in most cases you do get an opportunity to counter trend trade. Now, understand you're going against the grain. It's not for everybody. I know there are traders out there who love to trade counter trends, so let's just have a look at the daily. Let's just illustrate this idea. Okay, swing low, swing high. See this bullish accumulation range. This is point of origin for this swing here. We look for an opportunity when it trades back into this level, but you want to be very careful because the momentum is down bearish and you're trading against the trend. So you don't get much around this level here in terms of a favorable trade outcome. In this case here, swing low to swing high, pull back down into the point of origin. Well, we did get that. You want to be very careful trading against the trend. Swing low to swing high, back down to the point of origin. There's really nothing in it there. So understand, trading against the trend is not incredibly favorable. Look at this, for example, swing low to swing high. When it comes back down to the point of origin, look what happens, see? So there's nothing in it there. This is why this is risky. Swing low to swing high, counter trend, come back to the point of origin, there's very little in it. Risky trade, head south. Again, swing low to swing high. So do you really want to get involved with this? Back to the point of origin, there's very little in it. So this is why you don't want to be trading counter trend on the weekly time frame, or when the weekly time frame's trending south. Okay, so any of these opportunities here were short-lived and in my opinion really not worth the risk. So now we've got a move here, swing low to swing high. Our point of origin, well, you could even call it this candle if you like. Let's trade back into it, but do you really want to take that risk? Pull it from here. Let's come back down into this accumulation. This is why I prefer to stay away from these ideas. Now let's have a look at it from the trend continuation perspective. Bearish trend. Well, swing high to swing low. It didn't really pull back into our point of origin. It actually did back in here. So that would be a sell. But see the difference in terms of the probability factor? It's bearish. Swing high all the way down to swing low. We're looking for a short. Where did this originate? We've got to find a decent level. This big green candle here would be it. Apart from it, you got this little piddly candle here. This one here. This one back here would be okay. But look at this. So in terms of our distribution, we could go with this green, this strong green candle here. And look at the opportunity. Again, we're going with our fib retrace. See how it meets the 61.8 into the 786. Stop loss above this range high. So this is why trading with the trend far outweighs. I mean, it just goes on and on. Look at that. Pull back into, well, we've got this green candle here, this entire range if you want to extend it out, but that'll do. And we get a touch and we short. I mean, look at this, for example. Well, we take this big green candle here, that's really our range, pull it across. Disregard the small candle. We want to go with a full-bodied candle like that. Swing high down, swing low. This one doesn't pull into our level, so we let it go until it does. Look at that. There's your entry. Sell. Stop above this range high and look at that for a payday or a pay week or month or whatever you want to do. But that's a monster trade, that is. So this is why we're looking for, try and find a range from where the swing originated. Down, back in. There's your entry point. Swing high down, back in. You got this range high all the way down this candle here. That's a little bit questionable, but at some stage at the end of this trend here, where you're going to run into strife. But the idea is, if you've entered, even if you entered in short here, you finally get taken out. You know, you got to expect at some stage this will do that. But I mean, look at the opportunity through this entire trend here. I mean, we've had so many. And if you start building a position from up here, every time we get a pullback, you add to your position. This is massive. So this is why I don't like to trade counter trend. I do occasionally, but I'm tending to prefer to go for much higher probability setups. Okay guys, that's it. Hope you have a great day. Safe trading, and we'll see you in the next one.